Hello and welcome back to goldstocktrades.com. This is Jeb Handwerker, and today's November 23rd, 2016. And we have been going through now a 4-month sell-off in the junior gold miners. A lot of people are frustrated. A lot of people have given up. The exact opposite of what we saw this past summer when we had these conferences, that it was so crowded that even I, who have been going to conferences for years, could not find a hotel room. And I realized at that time, when gold and the juniors were on the cover of CNBC, that it's time to be careful. And when I saw a whole new list of promoters coming into the industry that was never here for a couple of years, I began to grow very cautious and did not attend the conferences, and only put out a select couple of recommendations over the past couple of months of some early situations that are completely unknown and at very low market caps, and which have pretty much held up. But in general, the past few months, we've gone from an overbought situation. So if you look here, we had a 5-year bad bear market in the junior gold miners. Then in January, we saw a massive rally. All these new investors came in out of the woodwork, buying up gold like no tomorrow on the front pages, and it went way above the 200-day moving average. Now, I always warned when stocks that we've invested in are up double or triple or quadruple, it's important to take partial profits because these markets are volatile. And if you don't take partial profits when you're making doubles and triples, it can be very difficult in this market. So many of our situations hit doubles and triples, and I hope that some of my subscribers took some of my advice and took some partial profits, and are okay to sit through a correction and actually realize that corrections are healthy. It's just what a doctor orders when you're looking at a chart. The corrections are what stabilizes a market, and if you look at the GDXJ, it's pulling back exactly to where I expect, and even a little bit more so, where the 200-day usually acts as support here. But here, there's been a little bit of a shakeout and a little capitulation. We're hitting oversold territories on the MACD, on the RSI. But experienced investors know that sometimes in volatile markets, especially when it was so high back here in July and August, that sometimes it breaks below and it shakes out. But reality is, if the moving average is sloping higher, a break below the moving averages is usually considered a buying signal. Because it usually will follow that moving average higher, and we're probably going to see a bounce pretty soon in the GDXJ. I'm expecting it for a few reasons. Let's look at this from a technical perspective. On this previous rally, you saw 3 different times that it reached an overbought condition, and the third time, that was the last one before we started seeing this significant breakdown below the 50-day moving average, and now where the 50-day was acting as a point of resistance, for the past 4 months, and we've had this downtrend channel, which the GDXJ is hitting sort of the bottom downtrend channel. So here, I think we may actually be nearing a very strong support. You had 3 overbought conditions. Now we've had 3 oversold conditions. We've had the first decline, the second, the third. I think we may be nearing the end. We have a reverse, looks like a reverse head and shoulders here on those momentum indicators. So 3250 on the GDXJ looks very strong. And from a fundamental perspective, the GDXJ is very strong, ready to reverse higher for the following reasons: is that a lot of these miners maybe not as much this year, but going into 2017 and 2018 are going to need to buy the junior developers and explorers because their resources are their supply is very limited. And we've already begun to see so much M&A activity in our sector. Kirkland Lake-Newmarket Gold and is just the latest one. We also saw recently Centerra and Thompson Creek. So there's been so many different developments that have been happening in the junior gold miners, but also another significant development is over the past few months, we saw a big increase of interest in the. Over the past few months, we saw a large amount of speculation capital moving from the junior miners into the weed stocks, the pot stocks, the marijuana stocks, which had a humongous run, but which has recently begun to show signs of a top. So a lot of that money is going to be coming back into the junior miners, and especially the junior miners with exposure to the infrastructure metals, the steel sector, and the industrial component, industrial metals. In late 2015, I was one of the few people that started highlighting copper and expecting a turn in copper, and we did in fact see a major turn in copper in early January, and we've just seen a major breakout after the Trump election in copper. So it's expecting investors are putting a lot of money into copper. It's a major breakout after maybe 8-year decline. So I expect this rally to have some legs to it. This may be good for all of the industrial metals, especially the steel sector, which we're seeing some nice rebound in the steel-related metals such as niobium and molybdenum and vanadium. Those metals are looking very strong. The rare earths, the industrial metals, energy metals should begin perking up. So first gold and silver took off earlier this year. Now copper's beginning to take off, and palladium. So that's very important to notice this. This is the first time we're really seeing a major move in copper. We highlighted that at the end of 2015, and now you can see from this year we've had a major uptrend and a major breakout post-Trump, and I think that there's, for the metals, for the mining, manufacturing, investors are expecting that the new executive administration in the United States is going to be much more friendly to the regulatory-wise to these sectors. So these sectors have been sort of suppressed for many years, and that's why the stock market's rallying, especially a rotation into the industrial metals and the bank financials, the regionals, the smaller banks. So there's a lot of positive that's coming out from this recent election, where we're seeing capital flowing into sectors that were beaten down for many years, many of which were beaten down because of a very difficult regulatory regime in the U.S. That did not favor domestic mining and manufacturing. And with this breakout of copper, I expect silver to outperform gold. So it's very important that we take a look at the Global X Silver Miners, SIL, and look where it may be bottoming. The 3250 level is a very strong level, which we expect it could reverse. Again, the 200-day is still pointing higher. We're correcting below the 200-day. So when the 200-day is moving upward, corrections below the 200-day should be considered buying opportunities, and we expect that the price will reverse above the 200-day and we'll get a bullish MACD crossover. If you notice here, again, the symmetry, 3 oversold declines. We expect that a lot of that has of the correction of that move from January to July to August has been corrected out. We've had 3 separate sell-offs. It could indicate that we're ready to make a turn either after Thanksgiving or after the new year, which we will be monitoring very closely. But until then, we're still in correction mode, but we're expecting to see some important support coming in the next few weeks or possibly even following Thanksgiving. So have a happy Thanksgiving and a wonderful weekend, and we will keep you posted with some new possible situations to be highlighted after Thanksgiving. Again, this is Jeb Hamburger from goldstocktrades.com.